Well, hi, and welcome to this week's video. I'm going to be talking about the euro, the pound, the dollar index, and gold. And I'm not going to be talking about NASDAQ or S&P or stocks or anything like that because those are a little bit difficult to read at the moment, and we'll get back to that at some later stage. But they didn't show any real direction last week as in comparison to these other instruments. Before I start with analysis on each of these, I just wanted to let you know of something that I heard about during the week, which I thought was really interesting. And that was a trader saying within a podcast or some other broadcast, I can't remember, but he said, my job as a trader is to put on risk, And I thought that was really interesting because if you're a trader, whether you're a fund manager or a managed account trader, a retail trader, or even just an analyst, your job is to actually look at markets, and if you're executing trades particularly, is to put on risk. And every single trade that you put on and every trade that you have open is assuming a position of risk. And you have to live with that risk all day long and all night long until that position is closed. And that's our job as traders. So, and it kind of goes against all human instinct and what's built into us because we're naturally risk averse. But the job of trading, of course, is to take on risk. And sometimes that risk doesn't work out and it ends up in losing. And sometimes that risk works out and ends up in profit. So I just thought it was an interesting perspective. So if you're ever feeling that this is a tricky business, you're quite right, because that's what the business is putting on risk. So during the week, we saw some news coming out. We saw jobs numbers coming out on Friday. The NFP numbers. The unemployment rate was slightly higher, not very much, than previous. So a slight decline there in the jobs market. And also the non-farm payrolls number itself, well, it was a little bit better than expected, but a little bit worse than the previous number. So if anything, all of that put together indicates a slightly weakening job market, which is, of course, good for the market. In terms of stocks and commodities and currencies and metals, anything that's priced against the dollar. Because of this twisted inverse kind of correlation that's going on at the moment, we want to see weakening in the economy and weakening in jobs in order to see a strength in the market, which is kind of weird. It does happen from time to time. But the effect of all of that was, in the end, the euro and the pound and gold and other currencies like the Australian dollar and so on all rallied against the US dollar. And this is what we talked about in last week's analysis. So we did drop down a little bit further than expected on the pound and on euro. Remember, if you had a look at last week's video, I was expecting these currencies to rise, for gold to rise. Gold was the most interesting, actually. But let's have a look at, these are the day charts. Let's have a look at the euro to start with. And this is Friday after the jobs numbers. And we had a little bit of bouncing around. If you have a look at the hourly chart, I'm just going to concentrate on the day charts for the sake of this video. But you can see we ended up having quite a big rally. I think there was about a 2% rally on Friday after all that news came out in terms of jobs. Let's have a look. Yeah, so about 2.3% rally in the euro. And critically, we managed to break and close above this level here at 0.9920. We talked about this number in last week's video. That was the level I was hoping it would hold at. It didn't hold there. We dropped back down, but only to one of the Fibonacci retracement levels, a little bit lower than hoped for and expected, but still overall holding above kind of a trend line support here and bouncing back up with a very strong close on Friday. And you'll see the same on the pound and on gold. We closed basically at the high of the day, which is really important. And closing at the high of the day at the end of a week indicates we'll probably see at least some follow through coming into the coming week. I'm not saying that we're through the difficult part just yet, and I'm not saying that the euro is bullish just yet at all. We've seen many attempts over the last period of this sort of consolidation between 1.03 and 0.97-ish in this range here. We've seen lots of attempts to rally, which have fallen down, more attempts, and every time we've tried to rally up and find some support, we've fallen back down. But overall, it does look like we're carving out a bottom on the euro against the pound, against the US dollar. I don't know if this is going to be much of a bottom, probably just a medium-term bottom. I expect that we'll be stuck actually in a range for some months to come, and that range could be roughly between where we are at the moment and let's say 1.0350, that magical number. And I could just move this, let's just clone this, and you'll see why I use that number as an important level. So that's right there. So I would say that's kind of the top of range. Major support here for a while, double bottom, falling through it, and then trying to get back up through it there. Moving averages were all there at those times. And so that's the 50 and the 100, 20 and the 50, simple moving average on the day chart. And so that level there, 1.0350-ish, not precisely 050, but 60, 70, 80, 50, 60, 70, 80, that's a very key level. And then, of course, we got the bottom at 0.95, 50, 0.96. So that's a key level. And right now, we're kind of stuck in the middle of that range. We've managed to bounce off the lows of last week and rally up very strongly, 2.3% rally, back into the middle of this range. Will we see a continuation of this? I expect we will see some further upside to the euro. I'm hoping we will, of course, because I'm long the euro, I'm long pound, and I'm long gold, as I said I would be last week. So we're still in that position. And the fact that we've closed after a very strong rally at basically at the top of the rally, at the close of getting tongue twisted here. At the close of day, at the close of trading, we closed basically at the highest point. That's what I'm trying to say, if I could just get the words out properly. So, and sort of into this area here, which is a pretty key area. This, you can see it's very messy, lots of up and down. That's a sort of an accumulation distribution zone, which is pretty important, and it's noisy. If we can get through that noise up to at least 1.01, which is the top of this region, I expect, and I obviously can't be sure of it at all, and we're living in treacherous and perilous times in all markets, particularly in the euro because of what's going on in Ukraine, of course, and news that comes out from there on a daily basis. But I think we'll probably see some follow through, at least to 1.01. So we're at 0.9960 right now. Call it, we're just about below parity. So we could expect another 1% move up to 1.01. And with a bit of luck during the week, bearing in mind that on Thursday, we've got the CPI numbers coming out of the US. So that's the big day, Thursday, this coming week. So up until then, we'll have to see what happens. If we get better than expected inflation numbers, then we can hope for the euro to go up to 1.0350, that top of the range. And that's where I think we'll probably get stuck for some time. So that's my strategy for the euro. Buy or stay long if you're long already. I'm long the euro from sort of halfway up here, up in sort of around 0.99, 0.9850. And I'm hoping for a rally back up to 1.01. And then probably, so that might take a day or two, then probably Thursday, if we get those numbers coming out, which are indicate that inflation may have come down a bit, then we could look at testing 1.0350 again, where I think we're going to struggle to get any higher for quite some time. So we might even be looking to sell the euro into rallies back up to that level, and that'll be interesting if that happens. So in the perfect playbook, long from now up to 1.01, busting through there at some stage, probably Thursday, up to 1.0350 to exit longs, and then potentially very gingerly try shorts on the euro for fall back into this range again, to be faffing around here for some months to come. You never know. Perhaps we've made a bottom. Perhaps the market is turning. Perhaps we're going to see a lot more dovish type talk from the Fed. Maybe the market's starting to pile into stocks and into currencies against the dollar and commodities, and we've seen a bottom. I don't think so, anything's possible though, so be aware of that. Now, let's have a look at the pound, and we'll see a pretty similar sort of move. My favorite actually is the pound. I think we're going to see a lot more conservative approaches from our new finance team in the British government, and I think this dip down here saw an incredibly volatile period which cleaned out a lot of junk floating around in the market. This was a massive move, a catastrophic move. Several structural things have been put into place to prevent that from happening again, and I think we've got some upside due on the pound. And we did see the Bank of England raise interest rates by 0.75%, 75 basis points during this week. So that's all pretty good for the pound. If you look at the daily chart, again, we saw quite a big, actually not quite as strong as the euro, funnily enough. I expected the pound to outpace the euro, but it didn't, which is also pretty interesting. So the pound rallied by actually more or less the same, 2.1%. Euro is about 2.3 or 2.4. But often the pound will do better than the euro under these sorts of circumstances, particularly given the interest rate hike in the UK. Nevertheless, we've held above that support. We did break down through that trend line, which I was hoping would act as support, but now we can get rid of that trend line. And the simple thing to do, you could leave it on if you want. You see we're at the underside of that trend line now. Let's just leave it on. So that's a natural resistance level because we've come down through it. We've back tested it from underneath. Now, the natural place to sell, if you're bearish on the pound, which I'm not, but if you were, we'd be looking at a natural selling zone. Now, if you look at the daily chart, this day, Friday, still has a lower high and a lower low than Thursday. So it's definitely not out of the woods as compared to the euro, for example, which has a higher high compared to Thursday, that's Friday's candle, a higher high and a higher low compared to the previous day. So that's looking pretty good, and obviously a big bullish engulfing candle, whereas the pound, yeah, okay, it's teetering on being a bullish engulfing candle, but it's not. And it also has a lower high and a lower low, and we're at the underside of this trend line. So if you're bearish on the pound, and we're at these moving averages, the 20 and the 50 SMAs, this would be a good place to go short. I'm not bearish on the pound. I'm bullish. I think we've come off the support level where this line is here, that previous support area. If we just put a horizontal line in there, you can see that we've sort of, okay, we didn't quite get down as low as that spike over there, but we came pretty close. And if I draw a line there, you can see that is a pretty decent support area. And I think we could get up to 1.1750. That's this top line here. And who knows, we could actually even get a little bit higher on the pound, up to about 1.2. So right now we're at 1.1372. So that's about 600 pips above where we are at the moment, even 1.22. So that's something to look at. I think the pound, for me, overall, is probably the best bet amongst those European currencies, or the pair of them. And that's what I'm looking for on the pound. So I'm still long on the pound. And if we get a little bit of a dip down at the beginning of the week, I'm going to add some more long positions onto that. Euro, I'm fully loaded, so I'm not going to add anything else onto the euro. But the pound, I've got sort of half of what I want on the pound. If we do dip back down, considering that we're now at the underside of the upward sloping trend line, which was support, is now resistance. So considering that, I think it's worthwhile taking some off, which I have done, and waiting for a dip down. So to alleviate risk at the top here and get in at a better price if we get a dip and some reaction to that trend line. Dollar index, well, this is where it all starts, actually. This is where everything hinges on. And if I draw a horizontal line, we can put a few in. Dollar index, really everything hinges on this. We're right at support now. We've fallen down to support. If the dollar's incredibly overbought overall, doesn't mean it can't go higher. Of course it can. But we're kind of bounced off or fell down from that downward trend line. We've fallen back down to support. And what's interesting is that this candle here, this bearish candle from Friday on the dollar index, sparked off the rallies in gold and euro and pound, didn't affect the Nasdaq and the S&P in the same way, which is very concerning for bulls on US stocks. But if we have a look at how much that fell, remember the euro was a 2.3% rally, the pound was a 2.1% rally, and the dollar index from there to where we got to was also a 2% drop, 2.1%. So pretty much in line with the euro and the pound. Those would have been the main drivers because the yen didn't move much. So what does this look like? Well, if you have a look at all of these other sharp drops, just go back and have a look. That one there, I'm talking about the really significant drops, that one there, and a couple of others where we've had basically a close right at the bottom of the move down. That one there, that one there, that one there. That's an exception. And that one, no, well, that one also worked out. But in most of these cases, the huge majority of them, we saw at least one day follow through in the same direction. Now, this bearish candle here is much bigger than we've seen for a very long time. We rarely see a 2% drop in the dollar index in a single day. I mean, we can go back to the beginning of the year. We haven't seen that yet, not once. So we're talking more than a year, if not longer, that we've seen such a huge move down in the dollar index. And that's it's pretty good, I suppose, for those of you who are looking to short the dollar or buy other things against the dollar, commodities, metals, other currencies. It's a pretty good sign. I think with that sort of momentum, we're bound to see some follow through, and the natural levels for that to move down to hereafter are, well, they're pretty clear, actually. So we've got this level here at 1.0920, pretty important level. But, you know, that's another 1.5% beyond where we are now. So another 1.5% lower. Then we've got 1.08, which is around over here. It's not as important as that one. Let's just clone this again. And so 1.08. I don't think I'm even going to put a line in, but the key one here, the most important of them all, the big kahuna of them, is 1.05. And that's the level that I think we could get to on the dollar index, 1.05. And that would be a decent correction and a good opportunity for the market then to consolidate and then perhaps try to regain these highs or get close to that and perhaps even a tad higher later on, and perhaps into next year after Christmas. So first target 109, which is 1.5% lower than where we are at the moment. That means if you take that 1.5% and you look at the euro and the pound, then we should see 100 to 150 pips further on each of these. And if you look at the euro, we're at 99.50, so add 150 pips on there. That takes us to 1.01 on the euro. That's that top line that we've already got drawn in there, so that's perfect. So that would align perfectly with the dollar index moving down 1.5%, and 1.5% on the pound would take us up to this, well, where are we now? 1372. That would take us up to, I suppose 1.15 thereabouts, somewhere there. So maybe 1.1520, which is kind of where this black line is that I've got drawn in. A little bit higher than that, but that's the natural resistance line. So we could test these lines on the euro and the pound that I've drawn in purely based on the euro and the pound chart. So that's that line at 1.01 on the euro and 1.1140 on the pound. Those represent the same distance that the dollar index will fall if we drop back down to the support, which it should do with the momentum, the big move, momentum closing at the low, the market closing right at the low, big candle, biggest we've seen the whole year, and the fact that most of the time when we get these big moves, one-day moves, that close at the lows, we get at least one more day follow through. With a bit of luck, with some time and some effort, we could see the dollar index crashing down to 105. So that's that. Now, the most interesting one of all of these actually is gold. And I happen to be long at gold now, in gold as well. Gold has been very weak this year, the whole year. We've just seen down, down, down on gold. We've formed a beautiful downward channel, but we failed to reach the low side of the channel on this last attempt down. That first attempt there down to 1,617 or 18. We didn't manage to reach the channel bottom. We tried again, made a double bottom, rallied up off there a few days ago. Tried for a third time, forming a triple bottom. Triple bottom's pretty rare in currency markets, and when it does happen, it's often indicative of a very strong base formation. It's incredibly rare, and when it does, it's a good chance to pounce upon it and say, yeah, I think we've got something here. And we've moved up to test the top of this channel, the downward trend line, which forms the top of the channel. And we also closed incredibly strongly. This was a 3% move. Again, you don't see 3% moves on gold very frequently, and a massive move higher on gold. So if I draw this little tool from the bottom to the top, actually 3.3% in one day, that move on Friday in gold. Incredible move, but we are at the trend line. We are at this horizontal resistance line, and we are just around about this moving average, which I keep on misquoting as the 100, but I think this is the 50-period moving average. Yes, that's a 50-period moving average. So we're just about at the 50-period, just slightly above it, at this downward trend line, which is the top of the channel. So not only is it a trend line, but it's a beautiful channel line as well. So it makes it pretty strong. And then we've got our next target up here at $1,727, having moved up from, well, 1,615 up to 1,681 in just over a day. So very strong on gold. Again, closing the day at the highest price that we saw during that day, which is very bullish. Again, same as what we saw on the dollar index. If you see these big moves where we get massive moves, there's very often follow through in the following days, like there, for example. We'll see the market continue with that momentum in the same direction. I think we're aiming for 1727 and maybe even 1,800 on gold. So again, I'm long on gold. I'm looking to buy any pullbacks into some of these support levels. You can draw these. The easiest way to draw these support levels for pullbacks, and just quickly to give you this last tip before I finish, just go to the hourly chart. So this is the gold hourly chart. There we are. And you can very simply identify pullback areas. If you want to get long gold, look for horizontal lines where you can enter. So I'll just put some in here quickly for you. So there's an obvious one there. So that's at 1,670, call it. There's another one here at 1,660. And there's another one here at 1,645. So any of those levels there would be good areas to buy gold. I would start off gently here, maybe a little bit more aggressively there, and a little bit more gently back down here. Because if we drop back down that far, then it might mean that we're in trouble. And you can do the same on the pound. I said to you, I'm fully loaded on the euro, but on the pound, I might be looking to buy some further dips. So I just take the pound day chart, and I want to know where to buy dips. So quickly switch from the day chart to the hour chart and see what we've got. Some big moves over there. Look at that during those periods. And I don't know why that's looking so weird. Is this the right thing? British pound, US dollar, 1 hour, 15-minute chart. Saw some massive ups and downs there. Oh, that was during the interest rates. Yeah, so, yeah, all very messy. But what we want to see here is areas to potentially buy into. And there's that trend line. So again, we can just sort of draw. It's actually, the pound isn't as easy as euro. So if you could go to a 15-minute chart, just have a look at areas to buy into. So And what we're looking for basically is just maybe trend lines, horizontal lines, Fibonacci. So if you want to draw a quick fib in there, you can draw a fib from the bottom to the top. And you want to be looking to buy at the 38 or the 50 or the 61.8% fibs. So that looks like a good area there at 1.1270. We're at 1.1380, so that's 100 pips below us. And there's another one there. And then this one's also pretty good at 1.1340. So you can use a Fibonacci tool, or you could use a trend line perhaps. So let's get rid of this. And just giving you some quick ideas whilst we're here. So you could draw a trend line like that sort of thing. Well, that's not going to work. That's a bit messy because of that spike. So we don't really want to use a trend line. And then just horizontal lines if you just identify areas of support and resistance. So, there's one clear one there. There's one there. And it can be as quick as that. And there's one there. So there you've got some levels looking to 1340, 1.1, well, call it 1370, and then about 1.12. Again, we don't really want to be falling back down to those levels. We want to see a move through there pretty quickly. So that's the way to do those retracement levels. So let me just summarize. Euro, I'm fully loaded. I'm aiming for 1.01 and then perhaps a little higher at 1.0350. That's the sort of thing, but I think we'll try and get out at 1.01, 1.02, start taking pieces off as we move up towards 1.03, 1.0350 ultimate target. And I think we might see some weakness thereafter and start to move down. I think we'll be stuck in this range for some time to come. Pound is my favorite one, as I said. I think we could see quite a lot more movement on the pound. I'm just going to remove all these drawings to make it a little bit more clear to see. But the pound, I think we could move up to at least here, the top of this, that's 1.1650, and potentially even up to 1.18 and 1.2, 1.22. That's my favorite one, simply because of the politics of what's going on and the structural changes that have taken place. Dollar index, we want to see that move down 1.5%, down to 109, and then maybe 108, and then maybe 105, where I think we might pause and go back up again. And then gold, I think we can get gold up to 1,800-ish, as I said before. Let's try and get gold here. 1,800 would be great. So that's up here. First of all, 1,720. That's that high. Pretty key level, actually. But then the most important, the biggest level, is around 1,800. So, but let's try and get there first. 1,720. First prize. I've got long positions on gold, and I'm looking to add if we get some dips. I'm not fully loaded here, but pretty close. And that's the analysis for this week coming up. It's a bit rushed and a bit jumbled and a bit higgledy-piggledy, but remember, we might be seeing a medium-term top in the dollar index. We might be seeing some changes in language and action from the Fed, and I don't know what's going on in the stock market. I'm going to see what happens as the week goes along. But as far as euro, the pound, and gold, and I'm also long the Australian dollar, haven't mentioned that, but for those of you who trade Aussie, look to buy that on dips in the same manner that I've spoken about buying the pound and gold on dips too. Good luck. Remember, trading is about putting risk on. It's a tough job. Take care.